Hi students, today we are going to discuss a new chapter. Chapter name is Valuation of Goodwill, Nature and Valuation of Goodwill. So first of all, what is the meaning of goodwill? You know that it's an intangible asset. It has no physical existence. And what is goodwill? Goodwill is a good name or a reputation of the company. That is what is called goodwill. It is an intangible asset. It has no physical existence. It is a good name or reputation of the company. How we are getting a good name or reputation? There are various factors which affecting the value of goodwill. What are the factors? So what are the factors affecting the value of goodwill? First of all, efficient management. If you have a efficient management, then you can earn more profit. More profit will leads to more goodwill. Next one, favorable location. If you are placed in your business in a favorable location which is very convenient to all your customers, then more sales will be there. Through more sales you can earn more profit. If more profit is there, it leads to more goodwill. Then favorable contract. If you are already having a long-term contact with your suppliers or your customers, okay, then it also leads to more sales. More sales means more profit. More profit means more goodwill. Then longer establishment of business. If you are maintaining a longer relationship between your customers, within your customers, then more sales will be there. More sales, more revenue. More revenue means more goodwill. Advantage of patent. Patent means what? You are getting an exclusive right to produce a goods. You have only the right to produce that kind of goods. Then you can enjoy a very good goodwill. Then access to suppliers. It is very easy to access to suppliers. Then it also leads to high goodwill. Then if you are producing high quality goods, then high quality goods always having very good reputation in the market, which means a huge goodwill you can enjoy. Then market situation. If the market situation is favorable, if you are having a very good demand, then you will get a high profile. High profile means very good goodwill. Then risk associated. If risk involved is very high, then goodwill will be very less. If risk involved is very less, then goodwill will be more. Okay, nature of business. The nature of business is also affecting. The nature of business in terms of if you are producing goods which is having really good demand in the market, which has very high demand in the market, then you can sell more goods. Through selling more goods you can earn more profit. More profit means more goodwill. Okay, these all are the factors which affecting the value of goodwill. These are the factors which affecting the value of goodwill. Then we can classify the goodwill into two, that is purchased goodwill and self-generated goodwill. Purchased goodwill and self-generated goodwill. What is purchased goodwill? Purchased goodwill means once you purchased another business, if you are paying more than the value, see, you need to pay 20,000 to purchase a business, but you are ready to pay 25,000. Why you are paying 5,000 more? Because that firm is having a very good reputation in the market. That's why you are ready to pay more than the actual amount. Okay, that is what is purchased goodwill. Okay, then self-generated goodwill. Self-generated goodwill, because of your past efforts, you are earning some very good reputation in the market. That is what is called a self-generated goodwill. Okay, in this chapter, mainly we are going to discuss method of valuation of goodwill. There are different methods for calculation of goodwill. Then there is a question, how to calculate the goodwill? It is an intangible asset. How to calculate the value? The value is calculating on the basis of profit earned by the business. If the firm is earning more and more profit, the goodwill value will be more and more. Okay, so based on the profit only you can calculate the goodwill. Okay, then method of valuation. Method of valuation important. First one, simple average profit. The first method of calculation of goodwill is simple average profit method. Average profit method. Simple average profit method. So in simple average profit method, how you are calculating the goodwill? Here goodwill is equal to average profit into number of years purchase. Here goodwill is equal to average profit into number of years purchase. Before that, first you need to get the average profit. Okay, average profit is equal to total profit. They will give last 3 years profit or last 5 years profit. You have to add all the 5 years profit, that is total profit, divided by number of years. If it is 5 years, 5. Total profit divided by number of years given. If any loss is there, that you have to deduct. If it is loss, that you have to deduct. All profit you are adding. If any loss is there, that you have to deduct, then divided by the number of years. If 5 years profit are given, divided by 5. If 3 years profit are given, you are dividing with the 3, then you are getting the average. Average means total divided by number of items. That is what is the formula to find average. Then once you found the average profit, next one is goodwill. Goodwill is equal to average profit into number of years purchase. What is number of years purchase? That they will give. Then what is the meaning of number of years purchase? It is a very good question. What do you mean by number of years purchase? The number of years which the firm likely to earn the same rate of profit after transferring the business to another person. The number of years which the firm is likely to earn the same rate of profit after transferring the ownership because of the past effort. Because of the past effort in coming years, how much profit? So number of years, exact definition is the number of years which the firm likely to earn the same rate of profit after transferring the ownership and because of the past effort. Because of the past effort, number of years we are going to earn the same rate of profit. That is what is called the number of years purchase. Okay, then average profit into number of years purchase will give you what? Goodwill. So this is the formula. Just in simple average profit, first step is you are finding the average profit, total profit into number of years purchase. Then the average profit you are multiplying with the number of years purchase given in the question, then you are getting the goodwill of the firm. Then there is a problem. When you are taking profit here, you can take only the normal profit. You can take only the normal profit. If profit in the profit which include any abnormal losses or abnormal gains, or if you forgot to provide anything, okay, you forgot to provide remuneration to the partners and all, that all you have to provide. If any unexpected loss came and once you deducted, okay, non-recurring incomes or non-recurring expenses, that also you have to adjust before finding the average profit. You can take only the normal profit. Then how to find the normal profit? That is what is shown here. See, calculation of normal business profit, normal course of business action, profit earned from normal course of business actions. Then profit and loss. First you are taking the profit given in the question. If profit 10,000. If abnormal losses are already deducted in this profit during this year, there is a earthquake happen or there is a theft happen or loss by fire, that you will deduct. Anyway, from the profit, loss by fire you will deduct. Once you deducted, you have to add back to get the normal profit. Actually, it is non-recurring item. Every time theft is happening or earthquake is happening or loss by fire is happening, no. So if profit is given, abnormal losses you are adding back because it is already deducted from the profit. Any losses happen, that already deducted from the profit. Now you are adding back to get normal profit. Then loss on sale of fixed asset. Loss on sale of fixed asset, you will deduct from the profit, you have to add back. Then overvaluation of opening stock and undervaluation of closing stock. If this is there, you have to add back. Then non-recurring expenses. If any non-recurring expenses are there, then that also you already deducted that, now you have to add back. Then capital expenditure charged as revenue expenditure. See, purchase of machinery treated as purchase of goods. That is one example for capital expenditure is charged as revenue expenditure. So if once you treat it like this, that also you have to add back, because that is already deducted from the profit and loss account. Now you are adding back. Okay, then if any abnormal gain, any insurance claim received, that is example for abnormal gains, insurance claim or anything received, that is abnormal gain, it is not recurring nature. So if anything is received, then that you will add, that is you will treat as an income that you already added. Now you have to deduct. So overvaluation of closing stock and undervaluation of opening stock and income from non-trade investment and partners remuneration if not deducted. If you forgot to provide any partners remuneration, then you have to provide the partners remuneration. The balance of profit only you can take for the calculation of average profit. To find out the average profit, you can take only the normal profit. In normal profit, this all adjustment you have to do if necessary. Okay, if any abnormal losses are there, that you have to add back. Abnormal losses already deducted from the profit, but you have to add back to get profit. Then abnormal gains, overvaluation, then abnormal gains, income from non-trade investment, partners remuneration. By doing all this, you will get normal profit. That normal profit all you are adding, that you are dividing with the number of years, you are getting average profit. Average profit you are multiplying with the number of years purchase, you are getting the value of goodwill under simple average profit method, Okay, second method of calculation of goodwill is super profit method. In super profit method, first one, you are finding the average profit. You know how to find the average profit. Average profit is equal to total profit divided by number of years. Same as average profit method. So in super profit, first step, find out the average profit. Second one, find out the normal profit. Here it is very important. Normal profit. How to find the normal profit? Normal profit is equal to capital employed into normal rate of return divided by 100. Capital employed into normal rate of return divided by 100. Normal rate of return, normal earnings by other firms. Okay, normal rate of return that they will give in the question. Then capital employed. So capital employed into normal rate of return divided by 100 will give you normal profit. Then what is capital employed? This part is very important. So capital employed, there are two approaches to find out the capital employed. First approach is liability side approach. In liability side approach, capital employed is equal to capital, the capital of the partners, plus if any reserves and surplus is there, you are adding. Then if any fictitious assets are there, advertisement suspense account or profit and loss given in the asset side, you are deducting. Then non-trade investment, if any given, that also you are deducting. The balance is called partners capital. So that is what is capital employed. Then this capital employed you are multiplying with normal rate of return divided by 100. You are getting a normal profit. Next one, there is one more method, one more approach to find out the capital employed. That is what is called asset approach. In asset approach, how to find capital employed? You are adding all the asset. You are taking all the asset except goodwill, fictitious asset, non-trade investment. Remember, you are taking all asset except goodwill, fictitious asset and non-trade investment minus outsiders liability. From total asset, you are deducting outsiders liability. That is what is called the capital employed. So by this two, you can find the capital employed. Capital employed, you are just multiplying with the normal rate of return divided by 100 will give you normal profit. So first average profit, second one normal profit, third step that is super profit. It is easy. Super profit is equal to average profit minus normal profit. Average profit minus normal profit is equal to super profit. Then goodwill is equal to super profit into number of years purchase. Super profit into number of years purchase. That is what is goodwill. Super profit, this super profit you are taking the number of years purchase given in the question, you are multiplying, then you are getting goodwill. So average profit, normal profit, super profit, goodwill. This is the method of calculation of goodwill in super profit. Then capitalization method is also there. Capitalization. There are two methods under capitalization. One is capitalization of average profit. One is capitalization of super profit. Capitalization of average profit is there. Capitalization of super profit is there. So in capitalization of average profit also, first you are finding the average profit. In all methods, first you need to find the average profit. Average profit, total profit divided by total number of years. Then capitalize the value of the business. Then you have to find out the capitalized value of the business. Capitalized value. How to find the capitalized value? Capitalized value, the formula average profit into 100 divided by normal rate of return. Average profit into 100 divided by normal rate of return. Then third step in this, you need to find the net asset. Net asset is equal to this. Total asset except goodwill, fictitious asset, non-trade investment minus outsiders liability. Net, to find net asset, this formula you are using. That is capital employed asset approach. That is what is net asset. Okay, to capitalize the value of the business, you are finding the net asset. Then you are finding the goodwill. Goodwill is equal to capitalized value of the firm minus net asset. You can just by heart this. Goodwill is equal to capitalized value minus net asset. Then you know that you need to find the capitalized value and also net asset. To find out the capitalized value, we need average profit also. So it is easy. Then last method of calculation of goodwill is capitalization of super profit method. Capitalization of super profit method. In capitalization of super profit method, you are following the same of this. Okay, super profit method. Here goodwill is equal to super profit into 100 divided by normal rate of return. Then here you need to get super profit. How to get super profit? Super profit is equal to average profit minus normal profit. To get super profit, first you need to find the average profit and normal profit. So here goodwill is equal to super profit into 100 divided by NRR. But how to find the super profit? Super profit is what? Super profit is equal to average profit minus normal profit. How to find the average profit? You know how to find the average profit. Normal profit is equal to capital employed into normal rate of return divided by 100. So remember, in capitalization of super profit method, first step average profit, second step normal profit, third step super profit. But in goodwill, in super profit method, goodwill is equal to super profit into number of years purchased. But in capitalization of super profit method, goodwill is equal to super profit into 100 divided by NRR. Only one step is the change. Okay, only one difference is there. Here goodwill is equal to the given super profit into number of years purchased. But here goodwill is equal to super profit into 100 divided by NRR. Only single change is there in this between capitalization of super profit and super profit method. So we'll do one example in this to understand all the method. One example we'll do and more problems we will discuss in our online session. Please check the question and write down the question to your notebook. The question is, from the following information, calculate value of goodwill of Mrs. Sharma and Gupta. There are two partners, Sharma and Gupta. First you have to calculate on the basis of 3 years purchase of average profit method. Second, at 3 years purchase of super profit method. Second method is super profit method. And third one on the basis of capitalization of super profit. Fourth one on the basis of capitalization of average profit method. All four methods are there. Then the information given, average capital employed, profit for the past 3 years are given. Then normal rate of return is 11%. Then remuneration to each partner for his service to be treated as charge on profit 2,500 per month. Okay. Assets excluding goodwill, all asset excluding goodwill minus outsiders liability 1 lakh. This is the information given as per the question. This is the information as per the question. Then how to solve this question? First we can do average profit method. Average profit method. Average profit method. It is easy. I told you the first step you need to find the average profit. How to find the average profit? Average profit, you have to add all the profit divided by number of years. Here first year profit is 1,60,000 plus 1,40,000 plus 2,70,000. This is there in the question. Last 3 years profit they are given. 1, 2, 3. You divide with 3. You will get 5,70,000. 5,70,000 divided by 3. That is equal to 1,90,000. So average profit is 1,90,000. I told you, when you are taking the profit, you have to check whether any abnormal losses included or any abnormal gains included or any undervaluation of stock or overvaluation of stock is there. You have to adjust these kind of adjustment before taking the profit. Here in this question, one thing is there, the partners remuneration. You forgot to provide partners remuneration. There are 2 partners and each of them are getting 2,500 per month. So from every year you have to deduct, from every year profit you have to deduct the partners remuneration. How to calculate the partners remuneration? 2,500 into 2, because 2 partners are there. This is 2,500 into 12. Then you can find out the 1 year remuneration. Then you are multiplying with 2, because 2 partners are there. Then you will get the remuneration will be 60,000. So this you forgot to provide. Either every year you can deduct 2,500 into 12, that is, here in the given question it is 2,500 into 12. 2,500 into 12 into 2. Okay, 2,500 into 2, that is equal to 5,000 into 12, which is 60,000. This you can just deduct from the average profit. Or this 60,000 you should deduct from all the profit. The balance of profit you can add. Or from the average profit you can just deduct the 60,000. The answer will be same. So 1,90,000 minus 60,000, that is equal to 1,30,000. That is equal to 1,30,000. So this is the average profit after the adjustment. Average profit is 1,30,000. So the second step, goodwill is equal to average profit into number of years purchase, right? Number of years purchase. That is equal to average profit 1,30,000. 1,30,000 into 3, number of years purchase, 3 years profit. Average profit in the question you can see it is 3 years profit. So 1,30,000 into 3, which will be 3,90,000. So goodwill under average profit method will be 3,90,000. Then second one, super profit method. In super profit method, the first one is finding the average profit. So average profit is 1,30,000. That already we found. First step, finding the average profit. Second step, finding the normal profit. How to find the normal profit? Normal profit is equal to capital employed into normal rate of return divided by 100. Capital employed is given in the question. Yes, capital employed is 10 lakh. Capital employed is 10 lakh into normal rate of return 11 divided by 100 will give you 1,01,000. 1 lakh, 1,10,000, 1,10,000. Then third step is what? Finding the super profit. How to find the super profit? Super profit is equal to average profit minus normal profit. Average profit minus normal profit. So super profit is equal to 1,30,000 minus 1,10,000. You will get 20,000 as super profit. So super profit is 20,000. Okay, next, fourth step, goodwill. How to calculate goodwill under super profit method? Goodwill is equal to super profit into number of years purchase. Here super profit is 20,000. Number of years purchase is given in the question. 1 minute. It is 3. It is also 3 years purchase. So 20,000 into 3, which will be 60,000. So goodwill as per super profit method will be 60,000. It will be 60,000. Then come to the third one, capitalization of average profit method. Okay, capitalization of average profit. Here also, first step, you need to find the average profit. You need to find the average profit. Average profit is 1,30,000, right? 1,30,000. 1,30,000. Second step, you need to find out the capitalized value of the firm. Capitalized value of the firm. Capitalized value of the firm is equal to, just check the formula, average profit into 100 divided by NRR. Average profit into 100 divided by NRR. Average profit 1,30,000 into 100 divided by NRR. It is given as 11. So 1,30,000 into 100 divided by 11. Okay, so that is equal to 11,81,818 point something. So 11,81,818. That is capitalized value of the firm. Capitalized value of the firm under our formula, average profit into 100 divided by NRR. Third one, you need to find out the net asset. Net asset is equal to all asset excluding goodwill, fictitious asset and non-trade investment minus outsiders liability. Here in this question it is directly given the net total assets value is what? Total asset value is excluding goodwill, it is 11 lakh and outsiders liability it is 1 lakh. So you will get net asset is equal to 10 lakh. Net asset is equal to 10 lakh. Then what is the formula? Under capitalization of average profit method, the formula to find goodwill is goodwill is equal to capitalized value of the firm minus net asset. Capitalized value of the firm minus net asset. Capitalized value of the firm minus net asset. Capitalized value goodwill is equal to capitalized value 11,81,818 minus 10 lakh is equal to 1,81,818. So this will be the goodwill value. So the formula, first average profit, then capitalized value of the firm. Capitalized value of the firm is equal to average profit into 100 divided by normal rate of return. Then you will get capitalized value of the firm. Then you are finding the net asset, all asset excluding goodwill, fictitious asset and non-trade investment minus outsiders liability will give you net asset. When you are deducting, goodwill is equal to capitalized value of the firm minus net asset. Capitalized value of the firm minus net asset. So you are getting 1,81,818. Then one more method is there, capitalization of super profit method. Capitalization of super profit. Remember, in capitalization of super profit method, only the last step is different. When you are taking super profit, okay, super profit method you are doing the same. First step you are finding the average profit. Second step you are finding the normal profit, then normal profit, then you are finding the super profit. Here goodwill is equal to super profit into number of years purchase. But in capitalization of super profit method, calculation of goodwill under capitalization of super profit method, super profit into 100 divided by normal rate of return. Here goodwill is equal to super profit into 100 divided by normal rate of return, into 100 divided by normal rate of return. So here super profit is given in the question. No, but we already found the super profit. Super profit is equal to 20,000, right? 20,000. Super profit is equal to 20,000. We found super profit. Super profit is equal to average profit minus normal profit, that we already did when we calculated the super profit. So 20,000 is there. From 20,000, 100, normal rate of return 11. So you will get 1,81,818. 1,81,818. It is easy. Super profit and capitalization of super profit. Only one thing is different here. Up to super profit, it is same, but here goodwill is equal to super profit into number of years purchase, but here goodwill is equal to super profit into 100 divided by NRR. Don't forget the formulas. You need to understand all the formulas before doing the problems. You need to understand all the formulas, otherwise you can't do the problems. We'll do more questions in our online session. Okay, first understand all the formulas for calculation of goodwill, then only we can practice the questions. Remember. Okay, thank you for listening.
Bright Education Center, Medical and Engineering Entrance Coaching Center, Hilal area, Doha, Qatar. For further enquiries, contact 306000679.